I am so grateful for the incredible support you've all shown, especially as we've been analyzing stocks from the US and China. This time, I wanted to shift our focus back to the Indian market. Today, we're looking at Suzlon Energy. Now, any stock analysis is incomplete without a solid fundamental deep dive. As investors, we look for long term value, but for a trader, the priority is often high volatility and momentum. While technical analysis is often enough for short term trading, my goal is to provide a complete view that supports both traders and investors. So today I'm changing my approach. I'll start with a high level fundamental overview before moving into an in depth technical analysis. We'll walk through the historical chart, look closely at the current market momentum, and discuss our target price predictions for the future. Whether you're looking at a short term trade or a long term investment, we've got you covered. Let's get into the discussion. Let's take a high level look at the fundamentals driving Suzlon Energy right now. First, the market position. Suzlon isn't just a player, they are India's number one wind energy provider, commanding a massive 32% market share. The financial turnaround has been nothing short of explosive. We're looking at a 538% year over year jump in net profit, but the real story is the balance sheet. Suzlon has successfully pivoted from extreme financial distress to being completely debt free, sitting on a net cash position of 1480 crore rupees as of January 2026. Looking ahead, the runway is clear. They have a record breaking 6.2 gigawatt domestic order book, which gives the company solid revenue visibility for the next 3 years. We're also seeing significant margin expansion. Operating margins have climbed to 18.6%, up from 14.1% last year, thanks to a surge in turbine deliveries. A major catalyst here is their new technology. The S144 turbine, their 3 megawatt series, is a total game changer. It now accounts for over 80% of their current order book. With all these factors aligning, growth is projected at a CAGR of 30 to 35% over the next 3 fiscal years. Suzlon is no longer just a recovery story, it's a growth powerhouse. If you're looking to dive deeper into the technicals, I've mapped several educational videos in the YouTube card above. My analysis is based on the Wyckoff method, a structured technical framework established by Richard Wyckoff in the early 1900s. Unlike lagging indicators like moving averages or the RSI, Wyckoff focuses on leading indicators, daily price action, and volume. The methodology relies on three core laws. Number one, the law of supply and demand. This is the engine of the market. When demand exceeds supply, prices rise. When supply exceeds demand, prices fall. Number two, the law of cause and effect. Market trends don't happen by accident. We look for a cause, usually a period of range bound consolidation, which builds the momentum for the next effect or the subsequent trend. Number three, the law of effort versus result. We look for harmony between volume, the effort, and price movement, the result. When we see a divergence here, like high volume with no price progress, it often signals an imminent trend reversal. Let's start by looking at the chart. What you see here is a monthly view showing 20 years of price action and volume. We are focusing on the leading indicator, volume and price. Every bar represents 1 month spanning from 2006 to early 2026. You'll notice a clear markdown phase that began in 2007, red arrow pointing downwards. The stock crashed from a high of 319 rupees to a low near 5 rupees. This downtrend lasted 5 years, finally bottoming out around 2013. Between 2013 and 2023, we saw a 10-year accumulation phase in green shaded box. This is where smart money builds a position. In Wyckoff terms, this cause is the energy needed to fuel a future uptrend. In early 2020, we saw the shakeout at 1.7 rupees. Look at the blue oval highlighted in volume and price bar actions. The volume during this test was at all time lows, confirming that supply was exhausted. Since then, we've entered a new uptrend. Look at the harmony between price and volume. Refer small green and red arrow near price and volume. When the price surges, volume surges. This jump across the creek happened between 2023 and 2024, where we saw massive volume reaching up to 6.5 billion units transacted in a single month. Currently, the stock is in a reaccumulation phase, small green box, finding a last point of support between 40 and 53 rupees. Based on our computed count for this 10-year base, we have two major targets. The first target near 86 rupees was already tested recently. The long-term target based on the full cost build sits between 185 and 190 rupees. While it won't be a straight line and we expect more small distributions along the way, the new uptrend remains 100% intact. In summary, we've moved from markdown to a decade of accumulation and now into a powerful markup phase. Combined with strong fundamentals, Suzlon Energy positioned for a significant long-term move. If you're new to the channel and want to master the markets with a professional edge, if you're ready to trade or invest like a pro, subscribe and hit the bell so you never miss an update. I'd love to hear your thoughts. Drop a comment below with your feedback or a stock ticker you want me to break down. Subscribing and liking helps us reach more traders who need this Wyckoff perspective. Let's help the trading community grow. Please stop the video and make sure to read the disclaimer and disclosure. Thank you for watching. I wish you all a very happy new year 2026. Happy investing.